Welcome to Java. Thank you kindly for joining me, particularly if you're new. It's May 16th, 2025, and it is also Friday heading into the weekend. So I'm hoping everyone has a wonderful weekend ahead of them. Really quickly, I would just like to say that Jeff wished me to pass on the thanks for all of the prayers and said it's okay that I could say who he was. So we're going to continue to pray for you. Good friend of ours here, so thank you all kindly for that. We appreciate that as he heads into his battle. Now, I've got quite a few things I'd like to bring up today and talk about. Today is an options expiry date as far as the market is concerned, but there's quite a few things moving in the background. Now, we hear a lot of times that history rhymes, may not necessarily repeat itself, but there's an awful lot of similar echoes. So I'm going to start kind of highlighting that because I'm seeing a lot of similarities beginning to take shape. So, not the least of which is the strikes that happened. This is prior to the Great Depression back in 1929, 1930. And we've got the locomotive engineers again on strike in New Jersey. First time in a couple of decades. So let's get started with what's going on in the markets. Fear greed meters down slightly. We've got a few retailers jumping out. Yesterday, the markets were a little bit choppy, ended up in the green slightly. Now, today's daily driver is a bit of hesitation. We've got a bond warning, and it's kind of saying that it might really be a good time to take profits. Now, not financial advice, but we're watching quite a few things going on. Now, there's a bit of a greed factor here, and it does appear that at this moment they're going to be opening in the green, and the futures are also showing a bit of continued strength, at least for today. However, going into the weekend and towards the end of the day could be a difference in this story, so just watch for that. A bit of caution, of course. Now we've got the Fed coming out, multiple speakers, and they're saying, in essence, no cuts prior to July is the general consensus. Now, I'd like to bring up what a couple of them have said in particular. Bostic said he sees one rate cut this year, which would push that out even further. Now, they are looking like they are going to be late in their cuts, in according to several analysts, not just the Fed, not just the president. We've got Fed's bar warning of a long and lasting supply chain disruption. I agree with this. It's going to be hitting different goods at different times. I will try to keep a watch out on that, but that could cause some very serious back end issues with goods. Now we've got French unemployment rate increasing 7.4% since early this year. So that elevated level, I believe, is a canary in the coal mine for what is going to spread across Europe. Germany's unemployment rate is not too far behind. So that will spread through the EU first. The UK unemployment rate is also increasing. Now, moving to NVIDIA, the shares came back. This is saying as clouds hanging over the chipmaker fade. So NVIDIA had a very good day for the stock price yesterday. Could be time to take profit. I'll talk a little bit more about the chip sector in general a little later. Now we've got Japan's economy shrinking for the first time in a year, seeing on tariffs. Now I'm bringing this up because we've got Asia in a kind of a bond together, which is really interesting because it's Japan and South Korea, which are typically American allies, and they are kind of joining forces with China in saying that these tariffs are really bad for them, and there's some issues going on there. So Trump will have to get back from the Middle East and begin to address the Asian side of this issue. So we've got the 10-year yield, actually, as I'm saying this, has gone up. But the problem is not the exact level because it started approaching much higher towards 4.8. It's making significant moves. And as I said yesterday, started approaching that resistance level to where it cannot hit 5, I believe, is where things really begin to unwind. So Now the level has come down significantly, but we're watching some moves in other debt markets now. It looks as if there is a lot of shift toward German bonds. And there is also the Japanese bond market also under watch now. Japan could be, because of all of these issues they're having with their economy, selling off some of the bonds, some of the debt, in order to kind of protect their economy because they have to. They're getting put in a corner. We've got the Dixie, relative strength of the dollar, 100.83 and dropping. So strength of the dollar dropping a bit. We've got the bond yields in a bit of flux. Today is, as I said, an expiration day for options. So just kind of watching those in the markets. Cryptocurrencies up slightly, still hovering. As long as it's between this 101,000 and 105,000 range, we're still kind of watching it consolidate and the others following in now. XRP dropped off a bit, still looking like that could be a major shift in the stablecoin market going forward. So, as I said, stocks poised to open in the green, but they could change. Futures also saying that there's a bit of strength there, but towards the end of the day, in the last hour and a half in particular, is when typically sell offs and high volatility happen. So, watching the volume will give you a little bit of a lead indicator into that, and it's going to get very volatile toward the end of the day. Now, with our calendar, we're getting import prices, building permits, and housing starts. These are all prior to the market open, but really what they're looking forward to is consumer sentiment to see how the United States American market plans on continuing to spend. So we'll go over that as well. US and UAE. Now, Donald Trump is currently in Abu Dhabi. They have now made an agreement to build a vast artificial intelligence data center here. So we're in a full-on chip and artificial intelligence war. He made a major deal with the chips to Saudi yesterday or the past couple of days. Now, I believe also there is a lot of competition coming out of China with a new chip, a couple of their corporations that are able to actually compete, not just artificial intelligence, but geared also toward quantum computing. So I believe this could be a very good move on the president's part if he can sell off a large portion of these American corporations and get these companies boosted prior to the competition mounting. It could be a high move. Now we've got the truth is behind what is happening here. Americans pulled back significantly on their spending as these took effect in April. Now, this is an inflation hold. They purchased everything upfront and now they're attempting to kind of hold these assets and see what comes next. Expecting higher inflation, it is going to happen, although not in a straight line. Things, don't happen in a straight line. We've got this export rush we've been talking about as businesses are trying to purchase as many goods as possible before this tariff pause in the next 90 days. We did have the strike at New Jersey Transit, halting the third largest commuter line. Now, we're going to have more strikes happening in the future. We're going to have more unemployment increasing because wages, contrary to popular belief, are not rising enough to outpace the inflation. So real wages still dropping. We've got Meta's Llama has reached a turning point with developers as delays and disappointment mount. So they're hitting a ceiling as far as their artificial intelligence. We've got Microsoft is also cutting managers and non-coders, so planning to lay off about 6,000 people. And they're also saying that they once bet on OpenAI, ChatGPT. Now they are reportedly getting into DeepSeek and looking to build cheaper artificial intelligence models. There are also rumors that they're looking to an Indian-based artificial intelligence corporation. So we'll see how this works out, but boosting the United States companies, as I said one last time, could be time to start looking at those. Now, we've got a couple of other things that are going on here. Stablecoin regulation said to be the next catalyst for crypto industry. This is coming from the head of Aptos. Now, I agree with this, even though I don't necessarily endorse stablecoins. I look at them as CBDCs. There are the ones coming in, but what they're going to do is also push cryptocurrencies higher as people begin to see these moving forward. Now, with this, we've got central banks testing smart contracts toolkit under Bank of International Settlements project called Pine. If you don't believe me, you can look this up yourself. You can just Google this project, see what they're up to. But the Bank for International Settlements is the main line to all of the central banks. They are the head of the snake of the banking industry, other than the families and corporations that back these. So, about as deep as you can get from the structural view of putting in the CBDCs. Now, with this is just a reminder with the Coinbase hack, their stock dropped over 7% because they sold off user information that was stolen or actually sold off from a couple of employees there. But the reminder is just that your information and your assets are not safe in institutions. So Coinbase supposedly has one of the higher levels of security. If you don't hold your keys and you give out your information, that's what's going to happen. Now we've got XRP sliding 4% as Bitcoin traders are cautious of $105,000 price resistance. As I said, we're in a consolidation phase here. XRP could be a buy on the drop, but definitely looking at Bitcoin if it does drop back below that 100,000 level. I believe it's going to take a little bit more to get there, but it is a possibility. Is it a buy at this level? Yes, for the long term, I believe so. Just my opinion. However, there's a lot of things that could be happening. We could get a little bit better prices here, but this is the same thing that happened down at 76,000 level, saying that it could drop to 68. So for the longer term, yes, it's still a buy. There is also, as I said yesterday, there is an increase in incident awareness for any air travel that has been issued. So this typically happens, there were a few things that happened the last time that they did this. The few incidents occurred over the past month after that warning was issued. So they've issued another, and apparently this is linked to the FAA. So in particular, because they are planning shutdowns, slowdowns, the FAA. So if you're doing any travel, just plan on delays and other things happening. And if you're traveling in the United States or through the United States, avoid Newark airports as well as DCA, Reagan, if you can, because those two appear to be two of the most troublesome born. So with this, I wish you all a wonderful weekend. I appreciate all of you being here. If you're new here, please drop a comment and let me know what you think. If you want to see something more out of these videos, please let me know. Thank everyone for helping the channel. And until I see you again, my friends, have a wonderful weekend and stay free.